Singapore's property market is heating up again after the year-end lull. Latest government data indicates nearly 400 new private homes were sold last month, and that's more than double December's volume. Suburban areas clocked the most sales, and foreign buyers are coming back for the multi-million-dollar homes. Rebecca Mateo reports.
Sold for $10 to $15 million. The agent who brokered the deal is coy about the exact price for this 4-bedroom condominium at Park Nova. But he says it took the buyer only about 3 days to make up his mind. The new owner is among foreign businessmen, working executives, and the new rich looking to buy here.
So more than half of them buying for the purpose of staying. The remaining, I would say, some of them, they are buying for the purpose of maybe asset allocation. So they probably already have properties all over the world, in UK, in US, in Japan. So they want to have Singapore as one of their basket. Yeah. And of course, there will be people also buy like a holiday home.
The strong foreign interest in Singapore properties last year is continuing into the new year. January's new private home sales more than doubled from December, with 391 units sold. Foreign buyers bought 57 of those units, the highest number since June last year, and about 60% more than in December.
Mainland Chinese buying interest has actually picked up since the beginning of last year, especially in the middle of last year when the COVID situation was quite stabilized. And for recent weeks, we have also received more inquiries from mainland Chinese buyers ever since their government announced that they'll be lifting off most of the lockdowns.
The most popular areas are in District 10. Chinese buyers tend to look for private condominiums in suburban areas. They bought the most condos in prime districts, such as those near Tanglin and Holland Village. They also vie for units in places like Alexandra and Queenstown. Still, foreign buyers, which also include Malaysians and Indian nationals, only account for 1 in 5 home buyers here, with Singaporeans holding an 80% majority. So, strong demand from foreign buyers is not enough to push up property prices as a whole, according to analysts. But they may raise asking prices in the same condo or surrounding area.
So going forward, we can expect to see as things start to open up more and more, we will start to see more and more transactions. Probably the more visible ones, you will see them in the prime areas, right? The core central region, prime locations, as these remain the playground of the ultra high net worth foreigners who are looking to buy luxury and properties.
The foreign interest can be a good thing, though, says one industry expert.
I think we do want foreign buyers to come in because they bring money that allows economic growth in Singapore, maybe even creates jobs in Singapore. Consumption goes up. So, consumption in housing goes up, and once you buy a house, obviously you have to fill it up with fridge and lots of stuff. So that improves Singapore's GDP.
The government is looking to boost revenues further by raising the buyer's stamp duty for high-value properties. Homes where the portion of the property value is in excess of $1.5 million and up to $3 million will be taxed at 5%, and those in excess of $3 million will be taxed at 6%. Following the announcement, real estate agencies saw a rush to close deals before midnight when the new rates went into effect. One agency reported nearly 60 units sold, 4 times more than the usual volume.
Some of these were more on the lacking of the documentation, so they have already expressed their interest already. It's only that they need to do the documents. Another group of buyers were those who were still deciding between, say, 2 or 3 projects. And this announcement sort of actually nudged them into making a buying decision so that they can save on the so-called the increase in the buyer's stamp duty.
Market watchers do not expect this to severely impact buyers. They say those who can afford to buy a higher value property would likely be willing to pay more. There will also be a wide selection of properties in the market this year, with at least 40 launches in the pipeline.
Turning now to public housing, analysts say moves announced in the budget could ease demand pressures in the oversubscribed build-to-order market and shift interest to resale flats. Now, the government plans to raise housing grants for first-timer families buying resale flats.
With the increase in grants, that sort of narrow the gap between a BTO flat and a resale flat. And buyers probably can now consider a resale flat more favorably because they can probably afford it now. We think that resale transactions this year could increase by 10% more because of this increase in the grant itself.
Housing grants for first-timer families buying resale flats will increase by up to 30,000 Sing dollars. That's for those buying a 4-room or smaller flat. For those buying a 5-room or larger unit, the grant goes up by $10,000. Experts say that the move can help buyers lower their loan amount or buy a flat that was previously out of reach.
I would say that it is giving first-timers another option, which is, I feel that is a good move because many of these first-timers, they may be cash-strapped or they may not have enough finances to compete with many other more mature families who may have the finances to pay more for some of these bigger resale flats. So giving more choices to many of these first-timers will help.
While the additional grant could lead to more demand for resale flats, the analysts say prices are unlikely to jump significantly, and this is due to other factors like cooling measures, high interest rates, and more BTO launches in the pipeline.